Welcome back, champions. Another mind-boggling stock news. Here are the top 5 stocks for the day. Number 1. Modine Manufacturing. Modine is one such stock that our proprietary system currently recommends. The company has a favorable growth score. While the historical EPS growth rate for Modine is 12.8%, investors should actually focus on the projected growth. The company's EPS is expected to grow 61.8% this year, crushing the industry average, which calls for EPS growth of 27.2%. Right now, Modine has an S/TA ratio of 1.51, which means that the company gets $1.51 in sales for each dollar in assets. Comparing this to the industry average of 1.04, it can be said that the company is more efficient. In addition to efficiency in generating sales, Modine is well positioned from a sales growth perspective too. The company's sales are expected to grow 6.7% this year versus the industry average of 4.4%. Number 2. Vital Farms. Vital Farms looks tempting, with its shares up 26.9% in the past 3 months. The consensus estimate for Vital Farms' 2024 EPS has increased 12.3% in the past 60 days to 64 cents, indicating growth of 21.4% from the figure reported in the year-ago period. Vital Farms looks well-placed due to its focus on fueling demand through new retail collaborations and the expansion of the product range with existing partners. The company's impressive marketing strategies are likely to help it witness a rise in household penetration. VTL recently highlighted its long-term goals. Vital Farms expects net revenues of $1 billion by 2027, with the gross margin expected to be 35%. Number 3. Syndus Distribuidora. ASAI has a P/B ratio of 4.43. ASAI's current P/B looks attractive when compared to its industry's average P/B of 5.51. Over the past 12 months, ASAI's P/B has been as high as 7.40 and as low as 3.27, with a median of 4.27. Value investors also frequently use the P/S ratio. This metric is found by dividing a stock's price with the company's revenue. Some people prefer this metric because sales are harder to manipulate on an income statement. This means it could be a truer performance indicator. ASI has a P/S ratio of 0.3. This compares to its industry's average P/S of 0.73. These are just a handful of the figures considered in Syndus Distribuidora's great value grade. Still, they help show that the stock is likely being undervalued at the moment. Add this to the strength of its earnings outlook, and we can clearly see that ASAI is an impressive value stock right now. Number 4. Smartsheet. Smartsheet is benefiting from an expanding customer base. This company ended third quarter fiscal 2024 with an annual recurring revenue, ARR, of $981 million and more than 13.9 million Smartsheet users. SMAR had 59 customers with ARR above $1 million. Smartsheet has a market cap of $6.52 billion, and its shares have returned 23% in the trailing 12-month period. The consensus mark for fiscal 2025 earnings has jumped 20.3% over the past 60 days to 89 cents per share. Number 5. AP Møller-Mærsk. AP Møller-Mærsk, based in Denmark, has had a good run on the bourses recently. AMKY shares have gained 28.9% over the past month. Due to the Houthi attacks, the Danish company decided to reroute all its shipping vessels away from the Red Sea. The consensus estimate for 2024 earnings has been revised upward by 87.18% over the past 60 days. Maersk currently has a VGM score of B. VGM score helps identify stocks with the most attractive value, best growth, and the most promising momentum. Which one would you pick?